Most people think of insurance as a monthly bill that gives them nothing back. Money goes out, nothing visible comes in, so they either over-insure out of fear or under-insure out of frustration. But insurance is not designed to make you rich or to be a poor return on investment. It is designed to protect you from financial shocks that could otherwise wipe out years of savings in a single moment. At its core, insurance is a system for sharing risk among many people. You pay a small amount regularly into a shared pool. Most of the people contributing will never face a major incident, but the few who do can be protected by the pool. This is why insurance feels like a loss when nothing happens. The cost of the people who do not need it pays for the people who do. This matters because some life events are too expensive to absorb on your own. A serious illness, a major car accident, a fire, or the early death of a household earner can each cost more than most families save in years. Insurance is not about replacing income from luck. It is about making sure one bad day does not financially destroy a life or a household built over decades. To understand how it really works, picture three key terms. The premium is what you pay regularly to stay covered. The sum insured is the maximum protection the policy will provide. The deductible or excess is the amount you have to pay first when a claim happens, before the insurance steps in. Together, these three numbers shape what your insurance actually does in real life. Let us look at a simple example. Imagine a health insurance plan with a small monthly premium and a moderate deductible. You stay healthy for years. The premium quietly leaves your account each month. Then one day, a serious medical event happens. Without insurance, the bill could be life-altering. With insurance, the deductible is uncomfortable, but the rest is covered. Years of small premiums suddenly make sense in one moment. A common mistake is to buy insurance only for things that are unlikely to financially ruin you, while skipping coverage for the events that actually could. People insure their phone but skip life insurance for their family. They insure a vacation booking but skip health insurance. Insurance should focus on financial catastrophe, not on minor inconveniences. The bigger the potential loss, the more important the coverage usually is. There is also a hidden risk in being underinsured. Many people assume that having any insurance is the same as being fully protected. But low coverage amounts can leave large gaps. A health policy with a low sum insured can still leave you with significant bills after a serious illness. Reading the actual numbers in your policy is far more important than the number printed on the brochure. A useful way to picture insurance is as a financial firewall. It does not stop fires from happening in life. It contains them so they do not destroy everything else. Without a firewall, one strong fire can spread across your savings, your investments, your home, and your future. With it, the fire is limited to a single room. The rest of your financial house stays standing and continues to function. A second key idea is the difference between protection and savings. Some insurance products combine protection with a savings or investment element. These can look attractive but often have higher costs and lower returns than buying simpler products separately. For most people, simple, term-style insurance for true protection and separate accounts for savings or investing work better than mixed products built for marketing purposes. A practical example helps. Imagine a family that buys a basic, low-cost term life insurance policy for the main earner and invests separately for the future in simple, broad funds. Another family buys a single mixed product that promises both protection and growth. Over decades, the first approach often gives both stronger protection and stronger savings. The lesson is to keep the two purposes clean and separate when possible. Beginners often misunderstand the role of small details in policies. Words like exclusions, waiting periods, and pre-existing conditions sound boring. But they decide whether your policy actually pays out when you need it. Spending one careful evening reading the fine print of an insurance policy can save years of regret later. The point is not to fear insurance. It is to know exactly what you are buying and what you are not. There is also a psychology side. People feel two opposite emotions about insurance. Some feel anxious about every possible risk and over-insure everything, paying for protections they do not need. Others feel invincible and skip even the basics, assuming bad events happen only to others. The healthy mindset is somewhere between the two. Respect for real risks, calm acceptance that you cannot insure against everything in life. A simple practical rule helps. Focus your insurance on events that could financially break you, not on events that would only annoy you. Adequate health insurance. Life insurance if others depend on your income. Insurance for your home if you own one and for your car if you drive. Each of these protects against a specific kind of catastrophe. Everything else is optional and should be evaluated on cost and need. There are things to avoid. Do not let an aggressive salesperson choose your policies. Do not buy insurance only at the very last possible moment, as costs can rise sharply with age and health. Do not assume small print does not matter. Do not over-insure things you could easily afford to replace yourself. And do not skip reviewing your policies every couple of years as your life circumstances change. A better habit is to think of insurance as part of your financial structure, not as a one-time decision. Review your needs once a year or after major life events: marriage, kids, a new home, a new job, or a business launch. Increase or adjust coverage thoughtfully. Cancel policies that no longer protect against meaningful risk. A living plan beats a forgotten policy every single time. Over the long term, the right amount of insurance changes everything. It allows you to invest with confidence, because you know one bad event will not wipe out your savings. It allows you to take career risks, because your family is protected. It lets you sleep better at night. Insurance, used wisely, does not just protect against loss. It enables a much braver and more thoughtful financial life. So here is the short version. Insurance is a shared system that protects you from large financial shocks in exchange for a regular smaller cost. Focus on events that could financially break you. Match coverage to real needs, not marketing emotions. Read the details carefully. Keep protection separate from savings when possible. Review your policies regularly. Used wisely, insurance is one of the strongest, quietest tools in personal finance. If you want a financially strong life, treat insurance as a foundation, not as an afterthought. Buy enough coverage where the stakes are highest. Avoid covering small inconveniences with expensive products. Read what you sign. Review it every year. None of this is glamorous. But the day a major event happens, the calm, well-prepared person will be very grateful for the boring choices they once made in advance.